Welcome to the Unconventional Path, Entrepreneurship and Innovation Stories and Ideas. Hi, I'm Mike Wasserman.
And I'm Bayla.
Today's guest on the podcast is Matt Kopko. Matt is the Vice President of Public Policy at DailyPay. Bayla, you and Matt had a great conversation about on-demand pay and how it can positively impact the ability of employees to receive their pay daily and not have to wait 2 weeks or more for a paycheck. It's an industry neither you or I really knew a lot about.
Yeah, I think it's really interesting. You know, it's a whole industry that I didn't even know existed. And just a little bit of a heads up, Matt uses the term PEO, and I should have asked him to define that during our conversation, but I didn't. And what PEO stands for is Professional Employer Organization, which is a full-service HR outsourcing provider, sort of like ADP. So that's part of the things that came up in the conversation. And what do you say, Mike? Should we jump right into the interview?
Let's do it.
Hello, listeners, and welcome to the Unconventional Path. Today we have a great guest, Matt Kopko, and he is the Vice President of Public Policy at DailyPay. Welcome to the show, Matt.
Great to be here.
So let me ask you a question. If you're at a social event and you get introduced to somebody, and after the introduction, they say to you, "Oh, so nice to meet you, Matt. What do you do?" How do you answer that question?
I typically say I'm a regulatory attorney.
Oh, and then do they leave the conversation or do they stay?
Sometimes they'll say, "Hey, I got a speeding ticket the other day. Can you help me with that?"
Yeah. All right. So tell us a little bit about DailyPay and what it is and what the company's about.
Yeah, sure. Well, first of all, thanks so much for having me on the podcast here. Excited to be here. So I'm the Vice President of Public Policy is what the bigger word salad answer is to what I do. And I work at a company called DailyPay. DailyPay is the leading on-demand pay provider. It's also called Earned Wage Access. It's a emerging financial technology that is flipping the payroll experience on its head. I think the best way to think of what we do is we work with employers to help make the payroll process more like an ATM and less like we pay you once or twice a month, because that's how our accounting teams work. In the meantime, actually, if you think about that, employees are essentially loaning their wages to their employers for 2 weeks at a time, interest-free. And so what we've seen is, life doesn't wait for the 15th or the 30th of the month. And in fact, especially people in moderate and low income jobs suffer real financial harm because of that status quo. And the alternatives out there really aren't good right now, right? It's overdraft fees from banks, it's payday loans, it's other types of things. And we said, technology exists, instant payments is kind of becoming everywhere. If we can apply this to the payroll model, isn't there a lot to be gained for employees in terms of their day-to-day lives? And so we work through the employer system to help track and manage and what I would say is essentially virtualize a payroll run on an on-demand basis for employees so that they know how much they've earned in a given pay period to date. And then they can access that money just like an ATM, like they would with any other financial asset that they have. So instead of waiting 2 weeks to get some sort of odd black box number post deductions in your bank account, what you can monitor with our service is on a daily and increasingly hourly basis, how much you're earning today, hour by hour, in net take-home pay. And then just like an ATM, access your own earned money whenever you want, when it's convenient for you, because after all, it's your money. If you quit or were fired, that paycheck is coming to you. And in a lot of states, actually, it has to be sent to you immediately as opposed to at the next payroll date. So our DailyPay exists to disrupt the payroll cycle and help payroll work for employees and use financial technology to help people get off of payday loans and stop reliance on overdraft fees and other really bad alternatives that have been existing out in the market for the last few decades.
Yeah. Well, that sounds really fantastic. I got to say, I haven't heard of this before speaking to you. I've certainly heard about payday loans and those various types of things. So I can understand how from the employee's perspective, this is really good, right? I have access to the money right away when I earn it, and I can go to an ATM and get it out. Why are the companies sort of interested in this, right? So if I'm running a business, I'm thinking, well, gee, this is going to potentially impact my cash flow because normally I have 2 weeks extra cash around.
Right.
So what's their sort of motivation?
Yeah, well, so on the logistics and funds, well, the great thing about it too is, part of why it's so seamless for employers is that we don't make them disrupt their payroll process or change their funding. We have a whole capital market system that we can handle that directly ourselves. But to your bigger question about why would an employer want to do this, actually there was a compelling value prop even before COVID, and it kind of just went, almost on steroids because of COVID. And the reason is retention and attracting quality employees. And what we had even before the coronavirus pandemic was clear demonstrated benefits for employers, saying that employees are happier, employees are happier, employees stay longer. And when you advertise a job that says you can get paid as frequently as you need, you tend to get more applicants and higher quality applicants. If you fast forward 2 years now to where we were before coronavirus, stores literally can't stay open. There's a Chipotle in my town, and I've gone by it multiple times at 4:30 p.m. or 5 p.m. to try to, get food for dinner, and it's closed, not understaffed, just straight up closed. And this is, something that's kind of unprecedented in American society, and the dynamics in the labor market are actually directly impacted by this. So what we saw was, fantastic technology that's great for consumers and growing with the employer demand before coronavirus. Now it's increasingly something that employers are coming to saying, man, I'm having, forget what the problems I was having before. I can't even really keep the doors open right now with my employees. How can I get more employees in the door? And so this workforce activation is another amazing benefit of this technology. So we have a great win-win here where it's great for employees. It helps them save hundreds of dollars a month and several $100s a year in the average case if you're reliant on those bad alternatives like overdraft fees or payday loans or late fees. And for the employers, it helps them attract and retain great talent.
Yeah, I can certainly understand how this would be a great benefit for employees. Now, how does did you say that you guys take care of the float? So from a company perspective, there's really no change in my cash flow? Is that what I heard you say? Yeah, explain that a little bit. Yeah.
Yeah, so for us, we take, the philosophy and design approach that, the more you make people change things, the less they will change, and everything needs to be seamless as possible. So our user experience for our employees is, as you'd imagine, kind of just like an ATM with a couple touch of buttons. Money can get instantly routed to your destination account of choice. Similar for employers, what we saw was if, HR and payroll are very complicated and intricate systems run by large teams. Like a payroll run for a medium-sized company can take a whole team of people multiple days to run it right. And so we didn't want to go into our employer partners saying, you have to change how you're doing things and add a whole bunch of new hires to do this thing that's going to be great for you and employees. We just knew that wasn't going to help the industry grow very fast. So we took an intentional design approach that said, we are kind of a layer that exists on top of your existing payroll procedures. Almost, sometimes I use like the Brita filter analogy. It kind of plugs in to the end of the faucet, and it's that link between the employer and the employee that allows us to transform these large, bolts of wage payments every 2 weeks or 4 weeks or 15 days, depending on the payroll cycle of the employer, into smaller bite-sized pieces as requested and needed by an employee. So we sit and control that entire layer. We don't require employers to alter their payroll procedures. There would be also compliance ramifications if we had to do this. So there's a kind of business growth objective here and a compliance objective at play here to say we maintain our own capital market system. We have banking partners, and we have other types of partners who provide the liquidity to make sure that these payroll systems can operate seamlessly. And it's also a great additional backstop in case an employer is late or, God forbid, has a problem with payroll. We're an additional party now in the oversight process to say, hey, this payroll wasn't received on time. Let's make sure we get that fixed. So, our approach is to do that without having to require employers to put up more money, put money up in different ways, start telling their HR teams that they have to start doing their job differently. We know that we succeed when our HR professional partners, are empowered and when employees are empowered.
Right. Excellent. So what's sort of the sweet spot for company size, number of employees that really works for this? Or maybe I should ask, what's the entry point, right? So what's sort of the boundary conditions here?
Yeah, so we serve employers large and small across the nation. We have hundreds of employers on the platform. Employers are as small as, I believe last time I checked a few weeks ago, so this data might be outdated, we did have one employer with as few as 7 employees. But we also do this for several of the Fortune 500 and 100, and we do this for multiple of the 10 largest employers in the nation. So some of our partners, for confidentiality reasons, don't want us kind of, mentioning their brand name, but there are very large names in terms of stores you would be shopping at, and places that you go to, buy goods every day that are operating this system nationwide for their employees. And so for us, there is, certainly an economy of scale, right? If we're going to build a custom integration to receive employee data, it's better on a unit economics basis to do that for 10,000 employees versus 1,000 employees. But we actually have a dedicated small and medium enterprise sales team and support system, so that increasingly we're trying to build this tool. And part of why the growth of the industry is so important is we want to be able to have as many small and medium-sized employers have access to this technology that they can. It shouldn't just be large employers that have access to it. And that's part of where my job comes in, because the more the compliance burden goes up, the more the first people you lose are those small folks who can't have a dedicated compliance team or anything like that. Right. So we do our best to have small, medium, and large employers in the system. We have some Goliaths on the system, and then we also have some really great partners that have been with us for a very long time that are mom and pop shops and are some, frankly, the first people who believed in us. So it's great to maintain those relationships as we've grown so much.
Yeah. So, this podcast, I think our major listeners are entrepreneurs, small to medium-sized business owners. So if I have a business with 50 employees, chances are I'm probably using some third party to do my payroll. So talk me through sort of how we would integrate this benefit to my employees.
Yeah, sure. And we're increasingly building these types of integrations that work downstream. So one thing I should also mention in terms of small and medium-sized businesses, we provide this solution through partnerships with other financial entities, other payroll providers, PEOs, and all other types of marketplace participants that are in the payroll ecosystem. So for us, when we were first starting out, every integration needed to be custom, right? Because it was, you had this type of time and attendance system and you were on this type of payroll system and they don't talk to each other. And we got to pull your accounting data from a different database. The nice part about having done this for hundreds of employers now is, while employers are not all the same, we've seen almost all of the technology tools and built an integration for that for another client at one point in time. So we now kind of have off the rack APIs that say, if you have this type of integration set up for your systems versus a different payroll provider, we already have the ability to not have to build that from scratch, and it'll be cheaper for us to be able to offer that to smaller employers. So whether you're using a PEO or whether you're using the other type of blue chip payroll services that do more outsourcing of the payroll process, odds are we have either done an integration with that company before or actually have it, in the case of a lot of these companies, actual partnerships. So we, for example, partner with ADP on all types of technology and ventures related to this space. So as we've grown, we've been able to embed this system increasingly into the financial infrastructure. And that's what's really exciting for us, actually. What I think the really exciting thing here is, what we hope for is a few years from now, people are going to look back and say, man, remember that old time when you used to get paid once or twice a month because that was just the way the world works? We want to embed this technology into the plumbing of the financial ecosystem so that no matter who you are, small employer, large employer, it can work through your bank, it can work through your payroll company, it can work directly through you as your company from a procurement standpoint. We want to make that as simple as possible no matter who you are.
Yeah, that makes sense. So let's say, again, let me go back to the example. I have a 50-person company. I use a payroll service that you guys have already interfaced with. If I say, okay, Matt, I want this, is that a 1 week process? Is it a 1 month process? Is it a 4 month process? Sort of take me through that a little bit.
I think the typical integration that requires actual custom technology takes about 6 weeks. Some of them can be up and running in a matter of a week or two if we have a lot of off the rack technology that we can leverage. So please feel free to go to trydailypay.com or dailypay.com and reach out to our team. We have, like I said, a whole team dedicated to onboarding small and medium-sized businesses. And if you're in a type of industry where you're having trouble attracting talent or keeping talent through no fault of your own, because this is just such a unprecedented labor market and supply chain system we have right now, these are the types of things that can help you get more applicants in the doors. These are the types of things that can help employees leaving for other jobs that offer more flexible benefits like this. So it's something that is increasingly seen as an attractor for talent.
Yeah. Well, that sounds like a very reasonable cycle time, right, to kind of get onboarded and up and running. So again, if I'm running a 50-person company, how do I talk to my employees about this? How do I talk to prospective employees about it, right? Because most people never heard of it. They go like, and then they might be like suspicious. Well, wait a minute, what's going on here, right? So what's sort of the communication strategy? Do you guys help with that?
Yeah, we typically work very closely with our employer partners, based on how much or little they need in terms of assistance for us. We do think there's a basic element of employee education that needs to take place in order for people to understand the benefit. But what we do see is, offering this as an employee benefit, right, allows you to engage in the right channel where people are assessing other financial benefits when they come on. And so once you explain to people what daily pay is, essentially it's an ATM for your paycheck. It layers over the payroll system and allows you to either just do nothing and monitor your pay balance, which is a huge benefit for people, by the way. We have, a large portion of people on the platform are not even engaging in financial transactions. The idea that you can see your net take-home pay on an hourly basis update for you, just like your pedometer, right? When you're taking your walk-in steps, it seems like such a simple thing, but it didn't exist before. And it was actually just, if we could put a little bit of a humble brag in there, it was just designated by Time Magazine as one of the best inventions of 2021, our pay balance, which has been patented and trademarked by Daily Pay, which is this mere information technology is a huge financial benefit to people. So what we find is people love the information benefit. It's almost like, gamified work. You check at lunch, oh man, I made $74 so far. That's so great to know. Instead of, just showing up at work every day, kind of checking out, and then in 2 weeks saying, all right, at least I got a hunk of money for it. I don't know how it all came together, but it seems less than I should have, but it's the amount of money I got. And now, so what we've done is we've impacted what we call the pay experience, where people can interact with their pay better. And so we do find this is actually a very attractive option for employees when presented to them. And actually, a lot of our employer partners will affirmatively advertise in job postings, daily pay, get paid daily, as an additional employee benefit to get people in the door. So once people understand that it's an employee benefit that allows you to get paid daily, it starts to click for them. And we actually see a lot of click through on the app. We would love as many employees on the platform as possible to use it, but anywhere up to 40% of employees at a given employer will tend to activate the daily pay system when given the choice.
Yeah, that's great. So you brought up regulatory challenges or issues, and I imagine there's some of those at the federal level and there's some of those at the state level. So, walk me through some of those a little bit.
Yeah, well, we live in a very regulated space, right? Money is involved, wages are involved, very sensitive personal data in terms of your accounting elections, your wage rates are involved. And so we have to be very mindful of compliance in all these regimes. And a lot of them historically actually weren't written to coexist together, but now because of this technology and big data, they find themselves coexisting together. So my job as the head of the public policy team at Daily Pay is to make sure that our technology is structured in a way to be the industry leader in compliance with existing law, and then also to engage with stakeholders and elected officials and regulators who are coming to terms with this technology potentially for the first time, saying, I don't know what this is. Can you help explain this to me? With any type of powerful new technology, we've seen this with some of the other larger technology platforms, that power can be used for good and it can be used accidentally sometimes for bad. So I think there's a lot of rightful dialogue out in the marketplace to say, how do we make sure controls are in place to protect consumers with this type of technology? Should there be new rules put in place? Because this isn't something that's unique to Daily Pay, right? A lot of emerging financial technology products find themselves in a very outdated statutory regime, and state governments and the federal government are wrestling right now very aggressively with what do we do about all this new technology? So there's been all these debates at the federal level about should there be a payments charter through the Office of the Comptroller of the Currency, or should financial services be regulated the way, for the most part, they've been historically regulated, which is at the state level? And then do state regulators have the, just let alone the understanding, but the bandwidth to be able to handle this explosion of new technology, right? It's not just Daily Pay and our competitors. It's other new overdraft avoidance fintech products. It's buy now, pay later products. There's a lot of new explosion of new technology in the financial technology space. And so my job, is pretty busy tracking these 50 states and the federal government and all the stakeholders involved, and making sure that the regulatory landscape is conducive to consumer protection and positive growth for the industry in ways that are good for consumers.
Yeah. Again, let me go back to my example about I run a 50-person company before, and I'm in New York State. So if I want to bring you guys on, is there something I need to do at the state or federal level first? Is there some forms or paperwork or regulations I need to take care of?
Well, we're headquartered in New York. I actually live across the river in New Jersey, but was in our offices in New York yesterday. So New York, as a random choice of a state, is near and dear to our heart. We're headquartered right in New York City, built in New York City. Very proud of that. But the beauty is this system integrates directly with payroll, and so there's no additional legal burden associated with on-demand pay or earned wage access at the state level. And my job is to engage with states who are contemplating or considering that, and helping work with them on, is something necessary? If so, what should it be? And things like that. So I think those conversations will continue. Almost no one was really particularly, focused on this industry just a couple of years ago. In 2019, it was there was about half a dozen states that did it last year. And so there's some interesting approaches that are emerging. There's not a huge body of precedent yet because it's still an emerging technology, but the California model has been interesting. Essentially, most states have said, we don't think we need anything. California has said, we'd like you to register with the government. So it's not financial licensure. It's nothing punitive. It's nothing from an enforcement standpoint. It's actually a really elegant way to deal with the challenge of emerging fintech, which is we don't want to do nothing, but we don't want to squish a bunch of square pegs into round holes here. So they came up with this kind of light touch registration proposal, which was a rulemaking that they proposed in October under their California financial protection law that would have us register with the state as a wage-based advance provider, and we keep operating with in an unrestricted manner in the state. So there's this balance that states are wrestling with right now, which is we want to have a handle on this, but we understand that there's too heavy of a touch can be done if not done the right way, and that's where my entire department comes in.
Yeah, and that's a burden on you guys, not a burden on the employer.
Absolutely.
Right?
I mean, and sometimes depending on how if a statute is written inartfully, it may accidentally create a compliance nightmare for payroll companies, or it may create an unintended compliance burden on employers. So we try to track all this. It's definitely very complicated and difficult. Sometimes there can be 20 points in a proposal that need to be talked through or addressed. There's data sharing involved. There's funds flows that are involved. There's the existing patchwork of laws that affect financial services and payments of wages and all types of that thing as well. So it's a pretty complicated space that I would say we're kind of in the early phases still of. A handful of states have started to look at it, and I'll be very excited to see how this kind of evolves in the coming years.
Yeah. Are there any
here to stay?
Yeah. Are there any states where you guys cannot operate?
No, right now we're operating in 50 states, and this is something that's actually relied upon by some of the most important industries to our economy right now. I mean, nurses, grocery store workers, retail workers, restaurant workers, hospitality workers, a lot of moderate income, particularly hourly based industries are really needing this technology right now. So again, we didn't set out to say let's build a business around frontline workers, but we found ourselves in the midst of the coronavirus pandemic keeping nurses out of having to turn to payday loans in the middle of the coronavirus pandemic. It's a really good story, and it's a way to feel good about yourself when you go to work every day to say, man, I am helping these people who are fighting on the front lines, helping us all try to live as normal of a life as possible, helping them avoid getting taken advantage of by other types of financial services.
Right. Excellent. Have you guys have any international presence at all?
We've been asked about that. We haven't done any sort of direct launches in other jurisdictions. We have some things that we're looking at. We have other providers in the global market that we're in touch with, and have some partnerships underway that are exciting. So I would say that's an exciting area of growth. This industry, frankly, is also exploding in other parts of the globe right now. There's, I track all the press clippings on our space, and I'll see a news alert about this or that earned wage access company in Europe, or this or that earned wage access company in the Philippines, or this or that earned wage access company in another foreign jurisdiction. So this is something that I think people are starting to realize globally is, the payroll and accounting systems of the 20th century are so much different. And it's not just, we're in a new century. We're in a world of instant everything with instant payments. And if you had to rebuild the system from now, no one would ever say, yeah, you work for, the 1st to the 14th, and then you get paid on the 22nd. Like this is, these are things that are just artifacts of history that are ripe for being updated. Yeah.
Well, it's interesting as you were saying that, because it made me think about one of my very first jobs back when I was still a young lad was in the construction industry in a home. I was working for a home builder, and I was a mason's helper, and I got paid at the end of the day. every day. Right.
Yeah.
I mean,
it's increased. That used to be the standard.
yeah. And that's how I got paid. And then I remember, I went to college, I got this great job, and I had to wait like 4 weeks for my first paycheck. And I'm like, holy camole, what's going on? Because I gotta pay rent, I gotta pay all these bills and stuff. And I was thinking, oh, this is gonna be great. I got a real professional job, got my college degree, and it was like a big shock. I went from being paid every day to being paid once a month.
Yeah, I remember when I was starting out my career, bills were due the 6th of the month, and depending on the payroll cycle, I might get being paid only a couple days before that, and you see this massive swing in your bank account balance after you pay, let's say rent and the credit card bill. I'm lucky enough where I didn't have a lot of circumstances where I had to think about that balance going to zero, but some of the people who are doing some of the most honorable jobs right now are in that situation. And so for us, it's very personal. And my job as a policy professional is not just the regulatory stuff. It's to actually get to the bottom of what this thing does for people. So very proud of the research we've done. We've partnered with some great organizations to look at how does this actually impact the financial wellness of these critical workers. And what we're seeing is historically, low moderate income workers are much more reliant than you would even think on overdraft fees, payday loans. Just a rough stat for you. Before access to our system, 1 in 4 employees who came onto our platform reported that they were overdrafting their bank account once a month or more.
Wow.
So that's it. 2 overdrafts a month, that's $70 a month. If you can access your earned pay to never have to overdraft again, either for free or at most $2 or $3, you'd have to be doing that every day, which nobody does, to be able to even come close to any of those fees. So, for us, what we're seeing is we're kind of, the way I've thought about it is we're reducing an order of magnitude on the fee burden here. So we have 0 fee in our sites, but right now we're turning $35 overdraft fees into $2.99 daily pay fees. And, there's more work to be done, but getting 90% of the way there that's $32 back in a hardworking person's pocket. That's multiple hours of post-tax work for them.
Yeah. So tell me a little bit about the company, the history, when you guys got started, the journey you guys have taken.
Yeah. So I've been at Daily Pay actually just over 2 years. January 3rd was my 2-year anniversary. And in startup world, at least, that makes me a bit of a veteran. But our company actually was founded way back in 2015 by former financial engineers in the New York financial ecosystem who had the same idea of saying, when I believe our CEO told us once the inspiration that came for the company was he asked his Domino's delivery guy saying, hey, when do you get paid for when you're making this delivery? And he said something like 3 weeks from now. And he said, man, there's got to be a great opportunity here to shrink that period of time. And that was how it was begun. And for a while, we started trying to offer this to Uber drivers. And that was one of the first things that we did. As you may know, same-day pay is now beyond common in the gig environment. And what we saw was a huge opportunity to go to employers to say, there's a really relevant policy conversation as well about protecting good-paying jobs with benefits. And we're increasingly losing people to these gig type of jobs. Why don't we embed that same technology in the employment ecosystem? And so we started with a couple small employers. I think 2017 we started bringing on some of our first, standard employment-based partnerships. And now we look back and millions of employees on the platform. Like I said, nationwide programs for multiple of the 10 largest employers in the nation. It's come, very fast. And this is a technology that most people still don't know. And a couple of years ago, almost nobody knew about. So yeah. I think there's a lot more to go still. Most employees still don't even have access to this type of technology, and everyone should.
Yeah. And how big are you guys? Number of employees, number of offices, et cetera?
Yeah, I think we're over 500 employees now. And when I joined, we were a little under 200. So just in the two years I've been here, we've more than doubled. And so we are kind of your prototypical fast-growing technology company. We are moving offices because, and among other things, we were kind of crammed into a pre-COVID style startup environment where everyone was elbow to elbow, and that's not going to be the stasis anymore. So we have larger teams coming back to work in the whole arc of return to work. And it's a larger team. I've had to meet a lot of colleagues for the first time on Zoom. Some of my closest colleagues, actually, I knew them only virtually for the better part of a year.
Yeah.
So it's definitely interesting to reflect on my time here and how much we've come in just the 2 years that I've been here, and since 2015 when this wasn't even a thing.
Yeah. Yeah. And are you guys venture backed, privately financed, or publicly financed?
We are venture backed. We're typically asked not to disclose any in terms of our numbers. There is some public reporting out there about some of our most recent funding rounds. I would say that what matters to us being able to provide this service to some of the largest companies in the country is they need to know that they have a partner that has great technology
Sure.
and financial solvency and financial capability. So we are very well capitalized, by almost an order of magnitude, the most well capitalized in the market. And that's critical to these large employers who say, you're going to be involved in my payroll system. I need to know that you're here to stay. And so DailyPay has taken great pains to build great relationships on the equity side, on the capital markets side, and otherwise to make sure that our well-oiled machine works consistently with some of the largest employers in the nation, because
Sure.
that's a huge capital need. And if you don't do this right, you may find yourself in a situation where, the service you have to deliver well outpaces your capacity to process payments. And we can never be in that circumstance where people, our whole reason for existing is helping people get their earned pay faster. If we were to be an impediment in that process, we'd be shooting ourselves in the foot.
Yeah. Yeah. Do you see, at some period in the future, 5, 10 years, that this will be the standard way of getting paid?
I do think that this concept of on-demand payroll is something that is going everywhere. It's not just us. There's now, there were only a couple of us a few years ago, but now there's dozens of competitors, and payroll companies are starting to try to offer this service. Legacy financial institutions are starting to offer this service. We actually are working with some of those institutions to be the technology solution for that. So I honestly do not, I hope it's DailyPay in most events, but I think this type of technology is rapidly, as we speak, embedding itself through all parts of the financial ecosystem that need it: payroll providers, payroll service providers, PEOs, banks, all these types of providers. There's API companies now that exist solely to provide APIs for employer data and employee data. So I do, one of the dents in the universe DailyPay is helping to make, I think, is we look back in a few short years and say, man, everyone just accepts the idea that they can get their earned pay whenever they need it, as just a basic fact of life, almost like electricity and plumbing. And it will be crazy to think, I think, in a few years, that just a few short years ago, that wasn't thought of as the standard thing.
Yeah. Yeah, I agree. That's really neat. Hey, so Matt, you've been a great guest. Before I wrap this up, let me ask you one more question. Is there something I should have asked you that I didn't? Is there something else you want to share with the audience?
I think for us, the most important thing is to be focusing on our users and what they're contributing to the economy. So, at least from my world, one thing that often gets focused on that I think isn't the right focus is, well, what are the right number of dollars to be paying in fees for this? And one thing that I see is we're meeting employees at a place in their life where they need real financial help and real financial improvement. So for us, the opportunity to be able to make this impact on people's lives is critical. And I think the conversation should be about how do we empower people to be able to have access to this type of technology, to be able to control their financial future and build financial wellness. And I think it's important that governments take note of the idea that, the way that things were done through the mail and fax, was just a few short years ago. But, when we're looking at regulatory regimes, I've seen competitors, substantially change their business model in a matter of just a couple of months. So the idea that we can fix all this in some sort of, regulatory process and be done is just not the way things work anymore. We need to have flexible regulatory structures that evolve. And so very excited to work with states like California and others who are trying to tackle this very complicated policy issue that doesn't just affect my industry. It affects a lot of emerging financial technology industries in a way that benefits consumers and doesn't disrupt the marketplace.
Yeah. Yeah. Well, very nice. Hey, Matt, thank you very much for being on the show. You were a great guest, and I certainly learned all about an industry that I knew very little about. Thank you very much.
My pleasure. Great to be here.
Bayla, well, that was a really interesting interview. I did a little more research, and I know a little bit about this industry, but it's kind of a controversial space with a lot of history. What's your take?
Yeah, I think you're right about the history. People think about payday loans, which is basically getting an advance on your paycheck. And, it's an expensive industry, and it's often, people who are struggling are the ones who have to deal with that stuff. I think this is a little different. I was sort of impressed by the idea and the concept. And as I mentioned in my conversation with Matt, I recalled my first job when I was a mason's helper for a home builder. And, we did all the brick and concrete work in this housing development. And it was interesting, this is back in the late 60s. I remember I got paid cash at the end of every day. That was my first job. that I had where I worked for an employer other than I used to mow lawns where I got paid cash also, but I got paid cash at the end of every day. And it wasn't under the table. At the end of this year, I got my tax statement with withholdings and all that stuff. So I wasn't one of those under the table type jobs. But that's what I was sort of used to. And then I got my first job out of college where I worked for General Electric Research as a research engineer. And I almost had to wait a whole month to get my first paycheck. And I remember it was like, well, wait a minute, what the hell's going on here? I've been working for like 3 weeks before I finally got paid. And, I had rent to pay, and because I had an apartment, and you got to pay a month in advance for the apartment and a security deposit and all that kind of stuff. And it really gave me this kind of short-term cash flow challenge. And I remember that when Matt and I were having the conversation, it said, gee, that would have solved my problem if I could have gotten basically not in advance, but basically pulled my money out as I earned it, as opposed to leaving it in the business, so to speak. So what do you think, Mike?
Well, Bayla, I looked at the history of this a little bit, and, why do you get paid monthly or every 2 weeks? And, these systems used to be all manual, and there were accountants and clerks sitting in doing all this stuff by hand and making sure that the payroll taxes were paid and all of these things. And that's how this system developed. It really was a manual process and needed time. But right. And okay, me, and most listeners will know I have pretty strong opinions on economic inequality. And I'm a capitalist. I believe in capitalism. I'm a business school professor. But my version of capitalism doesn't mean that the rich get richer and the poor get screwed. Okay, I actually don't think that's what capitalism means. We can have a long debate about that. But in short, especially by banks and the financial services industry, there's a long history of kind of unethical positions being staked out. Okay, so I'll get on my soapbox for a minute. And, I totally get this, what Matt was saying, that this is better than a traditional payday loan. And it is traditionally better than the traditionally huge overdraft fees that banks charge. They keep your money for a long time. And if you've got to move some of their money in, they totally screw you over, right? And you don't get anything. And these are predatory. They're legal, okay? But I don't think they're ethical. The reason why they're legal is because, of course, financial services firms are allowed in the U.S., like all other corporations, to really have a strong influence on the laws that are passed through lobbying and through direct but very lightly tracked political donations. And the financial services industry has long been one of the most, I like to use the word egregious, but we'll call it one of the most generous donors, right? That industry to politicians, and have had one of the most strongest lobbying organizations in Washington. And a lot of times they write the laws that they want passed, and they give them to the lawmakers, and the lawmakers submit them and get them passed. And this harms people without power, typically poor people. And they are of questionable ethics because they do help the profits of the company, but they have these negative impacts on society that don't often get talked about or measured. And that is these really high payday loans where people are paying huge interest rates that those of us that can afford and have better access to credit don't have to pay anything near this. Granted, there's risk. I get it. But it's really egregious. And this happens with used cars at the low end of the market, long history of gouging people. But it really happens also in financial services and things like this. So, and in Europe, we don't have all this lobbying, and they look at making sure that, the people that invest in financial services companies or private equity or VC, that they get a return on their capital, but not at the expense of screwing over the rest of society, which in the long term isn't good for anybody. It's good for the few rich, but it's really bad for the people who don't have a strong financial footing. And they go on unemployment, and they don't have health insurance, and these costs are higher in the long run. So if you take a long run view like I do, these financial service regulations are designed to protect consumers, to make sure that the laws benefit all citizens, and that these types of payday loans, which this system is replacing, and these huge fees a lot of times that individual consumers have to pay on overdrafts, these are really rare in Europe, and they shouldn't be allowed. there should be more restrictions on the lobbying and the corporate political donations and gifts that financial services firms give. And the correlation there is obvious to anybody who cares to look. But I'm digressing. Let's go back to these on-demand payroll systems like daily pay. It is an alternative and it is an improvement. I agree. But now employees are often paying a fee, in this case, $3.
Right.
We didn't talk about it, to access the money that you've earned. So essentially, you can argue on the other side that you're paying for your own paycheck. Okay? And I've got a little bit of a concern about that. Okay? It's better, I totally agree, but I still think it's ethically suspect. Okay? It's definitely better for an employee that chronically overdrafts, right? A couple times a month and gets these big fees, or is consistently using payday loans. This is a way better system for those workers. But I know plenty of people who don't make a lot of money in my own family and friends that I have. They don't make a lot of money and they don't use these services. And now they have to pay to access their money.
Right.
Okay.
Right.
That's a problem. Okay. $3 per transfer can add up quickly. Okay. If you use this service a couple times a week, every week. So to me, I love this concept and I love the idea. I'm not so hip on the implementation, but there's an easy way. To me, if employers really want to push this as a benefit to their employees, they'd say, okay, we're going to use this and we'll cover 3 or 4 transfers a month, equivalent to getting paid once a week, right?
Right.
No charge to the consumer. Yeah?
Right.
The
No charge
employer
to their
picks it up.
employees. Yeah.
Exactly. No charge to the employees. The employers pick it up. Now we're talking about a win-win. The employers are offering a benefit. They're paying for it. The employees could, at no extra charge to them, have access to their money on a regular basis. But for those that need in between, they would pay the fee. Okay, so they have an incentive to kind of get on a more solid financial footing, so they don't need to do this, right? And hopefully the education is there, so you can say, yeah, the first 3 are free. After that, be careful, right? Because you're gonna have to pay a fee. Or the company themselves can work this into their business model, where they say, okay, you know what? We'll charge the employer a little bit of a fee, right? Right now, the employers don't pay for this service, I think, right? If my understanding is correct, and their only revenue model is through the fees that the employees pay. So maybe they change the pricing model a little bit and toy with that to cover that. And I think then it would be totally awesome. I would have no problems with it at all. So I think this has great potential. I don't think it's there yet. I think let's say it's not enough. Let's not be satisfied with reducing predatory fees. Let's eliminate them. Let's take the high road and do the right thing, right? Even if that cuts into our profits a little bit, you know?
Yeah, well, I think you bring up a lot of good points, Mike, in this notion that it's a significant improvement over what we have, but still the people who need this service are sometimes less fortunate individuals, and we're still making them pay to get their money, which you know, why are we doing that? We shouldn't have to do that. And this notion of sort of figuring out something that's in the middle ground and incentivizes people to make some improvements, maybe in their own cash management and their own lives if they can. But at the same time, you know, gives them 2 or 3 or 4 per month for free. And after that, you know, there is a fee. I like that notion. That has a lot of pluses to it.
Yeah, a little bit of creative thinking goes a long way. And I think there's still, you know, if you look at a model like this, it still provides plenty of motivation for employers to adopt this approach. I agree. If you give your employees access to their money a little more easily, they're going to like you as an employer. You're helping them. And so I totally buy into this. And it is the lower strata of earners that need this help because they're not financially stable.
Right.
And they need this help. And it's a great service, but let's make it so that it's not costing them more, right? To get this benefit. Let's truly make it a benefit rather than shifting the costs onto the group that can afford it the least. And I still think there's plenty of profit margin there for the companies like Daily Pay and their private equity and venture capital investors. You've been on that side. You know how to look at the business model and say, you know what? Yeah, 28% margins are great, but if you can do 26% margins and make sure that the employees aren't paying anything, in the longer run, that's going to be more sustainable because more companies will adopt this model, right? And it'll get more public support. And it'll have less regulatory rowing against the tide, right? Regulators will be more friendly
open to it. Yeah.
Yep.
Yeah.
So it lowers looking at it at the long run, this is a much better way to approach this. But all right, I'm off my soapbox, Bayla.
Yeah,
Thanks for letting me stand up and yell. And I like your summary. Better, absolutely better than where we're at, but could be better still with a little bit of creative thinking and a little bit of more open-mindedness, I think.
Yeah. Well, there's a lot of people who live paycheck to paycheck, and they're still going to live paycheck to paycheck. The problem is they're still not making enough money, but this improves the cash flow. We all understand what cash flow is, and when you get paid once a month or twice a month, that's really disruptive to your cash flow. And
if you especially if you get an unexpected expense, and we all know right now in Corona, right, there's lots of unexpected expenses.
Yeah. So a couple of other things I wanted to touch on, Mike, from an entrepreneurial perspective, that I thought they did well, right? They clearly understood that they needed to integrate with the existing payroll systems that companies have. They weren't trying to invent a new payroll system that also provided this benefit. They understood that in order to get accepted, companies don't want to mess with their payroll systems, right? That's what, as we often call, a very sticky business. If you're selling payroll systems, once you're in and once you have a customer that's using your payroll system, boy, they're going to be very reticent to change to a new one, just because the risks are super high. Because when people don't get paid, man, do they get pissed off.
Yep.
So they understood that. So I thought that was a good lesson there for entrepreneurs, is that you have to look at your business, and particularly if your product or service is in an area that's critical to the operation of that business, you have to figure out how to get in there without being disruptive, which may mean you need to seamlessly integrate with existing systems and make it easy, right? And reduce the risk for your customer. Otherwise, they're going to be very reticent to make that switch. So I thought that was a really good piece that they came up with.
Yeah, their business model was disruptive, but their platform wasn't. And
yes, good way of putting it.
One of the things that I try to imbue into my innovation students is everybody likes to come up with a new platform. And it's like, okay, be careful of platform proliferation, right? That you can have too many platforms. If there's a platform that's working, build on that, right? Rather than create another new one that people have to make a choice, right? And that's definitely what they did. And you pointed that out. And it's the same thing. Don't reinvent something that doesn't need to be reinvented.
Yeah, agreed.
So yeah, really interesting, I think, analysis of this.
And the other thing I thought was interesting, particularly now with the very tight job market we have here in the United States. I don't know how it is over there in Germany, but there's a lot of businesses are closing early, and people, particularly services businesses, restaurants, other types of services business, they're closing early, or we have last summer there is a large what do you call them here? A place that has roller coasters and rides to go on.
Amusement park.
Park. Thank you, Mike. So there's a large amusement park here in the town right next door to us. I mean, really big. It gets 800,000 visitors during the summer season. I mean, it's a big place. And they typically hire lots of local kids, and they also hire students from foreign countries for the summer. And because of COVID, they had a really challenging time hiring people. They were closed 2 days a week. I mean, think about disrupting a business. Normally, they're open 7 days a week, right, for the whole summer season. They were closed Mondays and Tuesdays because they didn't have enough staff. So the notion of that, this type of daily pay is a benefit and a recruiting benefit, particularly for those types of service jobs, where people are not making a lot of money. I think that's something that as Matt and I were talking, I said, "Ooh, this could be a nice benefit." And he said a lot of companies have used it in such a way, which takes me back to your point of let's make this even better, right? If it is a benefit for the corporation, why not have the corporation maybe contribute a little bit to that $3 fee for the first 4? And now you're differentiating yourself from all the other employers that have this benefit, right?
Yep. Totally agree. Yeah, and it's funny. It's there's a lot of talk in the U.S. right now about inflation and about this problem with finding workers, and some of this is just, I think it's the last 25, 30 years, Bayla, and you and I have both lived through this, the kind of everyday low prices and everything has to be cheap, and we've wound up shortchanging our most important workers, right? And this again has led to a lot of income inequality, but it's led to what we see today, that prices were artificially low because labor costs were held too low. And people can carry that on their back for a while, but it's been so much now that the system has, a lot of people, their systems have collapsed, their worlds have collapsed. They're working 2-3 jobs. They're, doing Uber or Eats,
right.
or delivering things on top of regular jobs. And, this whole thing of the liberal wage. And again, I'm a capitalist, but people should be paid a fair wage for their labor and the risks that they take. And if the system functions, if a system functions, they're the ones that have money that spend it on goods and services, right? So if they don't have enough money to spend, if the poorest 1/3 don't have enough money to spend on food and shelter, right, that hurts a capitalistic economy. So it's really got to be a self-feeding machine, which means you have to pay your lowest workers enough to live on, enough to have a nice life,
right.
and have a quality of life that they're satisfied with. And in the U.S., this is a problem, right?
Yep.
And I think that's what we're seeing. And again, these types of benefits are ways to lift this bottom third of the population up so that they have financial security and they don't, right? Again, do you want them buying, what do you want? Do you want poor people in your community with enough money to be buying fruit and vegetables at the farmer's market, right? To supporting local retailers where they can buy some reasonably priced clothes, that they're able to buy a used car from a local car dealer and help the local economy? Or you want them paying that money in exorbitant interest rates to banks, right? Or overdraft fees, right? No way. You want them spending that small amount of discretionary money that they have locally, right? That's good for the local economies, and then that flows up rather than being charged fees, and that money going, no offense, to private equity, right?
Yep.
Doesn't make any sense.
Yeah, agreed.
So that's okay. Soapbox part 2. Sorry, I promised I was done. Now I'm done. What do you think?
Right.
Wrap it up?
Let's wrap it up, Mike.
All right. Listeners, thanks for joining us today and listening to me rant. Sorry, I'm fired up today. It's our first after the holiday break, so I'll calm down for next week, I promise. We hope you found this episode interesting and thought-provoking, even if you don't agree with me, and I realize lots of people don't agree with me. It's okay. It's what makes the world interesting. But if you have questions about what we've discussed, please feel free to get in touch with us. Our email is, as it always is, bela.and.mike@gmail.com.
Hey, and please do follow the podcast on your favorite podcasting application if you already haven't done that. And so until next time, signing off from upstate New York. See you soon, Mike.
Sounds great, Bayla, from over here in Münster, Germany. See you soon.